Something strange is happening in the economy. Stocks, gold, Bitcoin, housing, the money supply, even the national debt, all hitting record highs. Yet ordinary Americans are falling behind. Mortgage distress is spiking, rent payments are slipping, job openings are vanishing, and wealth inequality has never been wider. How can everything be up while so many are falling down? Are these signs of an imminent recession, or are we living through something bigger? A fourth turning moment where old institutions collapse and revolutions stir? Or is the new force of AI accelerating us into a future where the old rules no longer apply? And most importantly, what role does Bitcoin play in this confusing moment, where collapse, revolution, and acceleration are all on the table? Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. So last week, the Fed cut rates for the first time in years. Normally, you'd expect that in a deep recession, not at the peak of the strongest economy we've ever seen, at least by asset prices. But here's the fundamental question. When people say the economy is strong, what do they mean? Do they mean the stock market? Because yes, US equities just hit their most expensive valuation in history. More expensive than the dot-com bubble. Even more expensive than the run-up to the Great Depression. Or do they mean housing? Because home prices are also near all-time highs. And adjusted for inflation, homes have never been more unaffordable than they are today. But for most Americans, the economy isn't stock tickers or home equity charts. It's paychecks, bills, and debt. And here, the story looks very different. Internet searches for the term help with mortgage just surpassed the 2008 financial crisis. Late rental payments are also ticking up sharply, the highest level we've seen in years. And at the same time, job openings are collapsing even as the S&P 500 climbs higher and higher. That disconnect tells you everything. Wall Street is booming, but Main Street is losing ground. And while asset owners celebrate, the middle class has slipped so far that the top 1% now owns more wealth than the entire middle 60% of Americans combined. The warning signs are piling up. Moody's now puts the probability of a US recession at 48% in the next 12 months, nearly a coin flip. And hanging over it all, the US dollar is having its worst year in decades. So yes, by some measures, the economy looks strong. But what we're seeing is a K-shaped economy, soaring at the top and breaking at the bottom. So how do we make sense of this confusing moment, where Wall Street is euphoric, Main Street is breaking, and the Fed is at the very start of a rate-cutting cycle? One perspective comes from veteran macro investor Jordy Visser. Listen to how he connects AI to the stock market euphoria we're seeing right now.
I will tell you the number one thing for me as someone who spends his life talking with very, very smart investors about artificial intelligence, I don't think people understand artificial intelligence at a macro level. I think it's a very challenging thing to commit the time, both from a user basis, because I think you have to use it to see the productivity gains at a level that makes you realize, oh my God, this is amazing. And then from the other side, you really have to spend the time going deep into rabbit holes of what this whole thing means. It is the number one and the only thing driving the economy. But the problem is, I think it is the major driver of this K-shaped economy. And this is something that, Darius talks about a lot when he's with you. This gets put in the papers all the time, but I don't think people put into context what a K-shaped economy is.
So Visser argues AI is fueling corporate profits and market valuations at the very top, while the real economy, jobs and wages, are being left behind. This explains why stocks soar even as people search for help with mortgages and job openings dwindle. And it sets up the uncomfortable truth. The K-shaped economy only widens over time. And this divergence isn't just about technology. It's about money itself. Since 2020, inflation has run more than double the Fed's target. And yet we're told it's under control. But look at housing, healthcare, tuition, and assets. The costs that actually impact lives are running away faster than wages. It's becoming clear to everyone that CPI is a rigged basket that hides the very inflation people feel most. And once inflation shifts from numbers to expectations, once people start to believe their money will buy less tomorrow, the cycle feeds on itself. And that's when trust in the system really begins to erode. And that's where Bitcoin becomes even more relevant, because it isn't just an asset, it's a form of money immune to inflation, which is why Jordy Visser and many others believe Bitcoin wins regardless of what comes next.
We say K-shaped economy. Okay, well, how many people are in the K, on the bottom level of the K, and how many people in the top level? It's getting very heavy on the bottom level, especially when you do it relative to the size of this. And so I think whenever that's happened in history, there's ended up being a revolution of some sort. I think technology is the democratizing thing of that. And that's just my belief. It could change, something could go on. But the reason I believe in Bitcoin is because Bitcoin should accelerate into either scenario that plays out, because the growing number of people on the bottom end of the K do not feel like they're part of the system. And this is the part of the fourth turning that, if people haven't spent time, it's about losing trust. So the University of Michigan consumer sentiment, to me, has a reflection of losing trust and hope in the economy. So Bitcoin is a trustless thing. It was set up first to deal with the fact I don't trust the banks. Well, now we're past the banks. I don't trust my employer. I don't trust the government. I don't trust the banks. I don't trust the currency. I don't trust the debt. I don't trust anything. And so I don't see how you all of a sudden get the trust back. And if you read the fourth turning, there needs to be an event. Well, I think AI is that event.
For those unaware of the term, this is the essence of the fourth turning. Trust in banks, governments, employers, even the dollar itself is breaking down. And in that collapse, Bitcoin doesn't just survive, it accelerates. Because it doesn't rely on trust. It was built for a world where trust is gone. And on what Bitcoin did, Larry Lepard makes the point on inflation bluntly.
I really had no real idea of what inflation was until I found Bitcoin. And I think, like, if you ask my friendship group, people my age, until COVID happened, they wouldn't have been very well aware of what inflation was and how it impacted them. But my parents, who would probably be a similar generation to you, like, absolutely know what it is because they lived through the 70s. And so, like, everyone waking up to this is, I mean, it's kind of scary in one sense, but incredibly bullish for things like Bitcoin and things like gold.
Oh it's insanely bullish for what we've got, and we're still, I still think if this is a 9 inning baseball game, we're in somewhere between the second and the third inning. I mean, it's early days, and I spend a lot of my time talking to investors, wealthy people are my clients and others, and so many of them are, they're backward looking. They're like, well, they'll get it under control, and gosh, gold's gone up a lot, Bitcoin's gone up a lot. Don't we sell it now? And I'm kind of like, well, no, you really don't, because it's going to get worse, not better. Now there'll come a time when they've gone up a lot and monetary reform is being talked about, and they're going to eventually address all these issues and solve this problem. And at that point in time, there'll be a time to sell this and move back into productive businesses, which, perhaps we'll be selling at 5 times earnings instead of 50 times earnings. But we're a long way away from that right now. I mean, we're only just getting started. People should think about this as we are early in the inflation game, not late.
We're still in the early innings. That's the takeaway. Inflation hasn't been solved. It's just begun to reshape behavior and expectations. And the best example of this is the Fed cutting rates into CPI levels above their long-held target of 2%, which means the gap between asset owners and everyone else will only grow wider and wider. And if you're wondering where that road leads, Lepard offers a stark metaphor.
I'm encountering a lot of people who say, yeah, I can't buy that because you bought it much cheaper, and I'm happy for you that you made all this money, but now it's high in price. I can't buy it. I mean, it's not a good investment to buy it this high. And I'm like, no, you don't understand. You got the model wrong. The model is that the fiat currency, the dollar, is the Titanic and it's sinking. And I bought seats on the Lifeboat, and they were cheaper when I bought them, but they're more expensive to you. And I'm sorry for that, but you didn't buy them when I did. But, the question to you, and you got to address, is, do you want a seat on the Lifeboat or do you want to stay on the Titanic? Because, the Bitcoin seat is now 117, and the gold seat is now, 3,600. Your choice, right?
And how good a lifeboat do you want to get on? You want to get on Bitcoin, because if
Well,
gold
that's
has to
right.
be,
And I think Bitcoin's a better lifeboat than gold, but they're both, don't get me wrong, they're both going to work,
Yeah.
Danny. I mean, they're both going to work. Bitcoin in a much better way, but yeah.
No, I can completely buy that. But if gold should be $90,000 an ounce, like I want to know what the Bitcoin price is there. I can't do the math, but millions of dollars.
Insane. No, I mean, it's $10 million.
Our monetary system is the Titanic. It's already taking on water. Gold and Bitcoin are the lifeboats, but Bitcoin, with its fixed supply and portability, is the stronger vessel. The only real question is whether you've secured a seat before the ship sinks further. It's becoming more and more clear we're living through a fourth turning. Assets at the top break records, the middle class breaks under debt, inflation festers, trust evaporates, Technology accelerates the divide in all paths, whether it's recession, revolution, war, or hyperinflation, points to the same truth. What price would you put on being able to move your savings in a war zone, or in a depression, or when your currency collapses overnight? That's the true value proposition of Bitcoin, a lifeboat you can carry in your pocket. And it's a truth the West still struggles to see, only because we haven't lived through the kind of suffering Bitcoin is designed to protect against. We're in the late innings of the unwinding of a long-term debt cycle, and it's becoming more and more clear that Bitcoin is no longer optional. It's the one hedge that works and stands to benefit from all potential scenarios. So if you see where this is all headed and the opportunity cost of not having a Bitcoin strategy, and you want to build a long-term Bitcoin position with confidence, then Swan Private is for you. The Swan Private team works with high net worth families, individuals, and businesses to design long-term accumulation and custody plans. No noise, just Bitcoin. Reach out at swan.com/no-second-best to start your journey towards generational wealth today. And don't forget, BTC in DC is just 1 week away. September 30th and October 1st at the Kennedy Center, Michael Saylor, Jeff Booth, senators, policymakers, and Bitcoin thinkers from around the world will be there. This is more than a conference. It's where Wall Street, Washington, and Bitcoin collide. Visit btcindc.com and use code SWAN for 10% off your tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? Are we on the verge of a recession or a full-blown reset of the system itself? And in that world, what price would you put on money you can move anywhere, anytime without permission? Drop your thoughts in the comments below. Like this video if you made it this far. Share it with a friend who's not on the Lifeboat yet. And subscribe to the Swan Bitcoin channel for more high signal content every day. Thanks for watching, and remember, there is no second best money.